Hey guys, good morning. Eagle trading 8:47 a.m. 6/20/2020. I think I'll go into the market reversal this weekend that we saw on Friday. I think it had a little bit more due to a liquidation reversal, getting out of positions going into the weekend. I think there's a little bit of concern over some political issues, and I think a lot of the traders were just looking to take money off the table. And going into the gap on the S&P 500, and I'll go into that later, my opinion was that the market had a little bit more buying power than it did selling power. No doubt there was selling on the top end with overhead supply. Hence, in a few of my videos, I said I was more apt to be shorting rallies than buying weakness. But I do feel like technically it hasn't broken the market, that the market just had a little trepidation going into this weekend. I know there's an interview with a gentleman who wrote a book about Trump. You guys all know the details on that. I forget if that's on 60 Minutes or what. And then you have some rallies and some political unrest that we've talked about for months, that I think there's going to be a lot of political unrest going into the latter part of the year. And it's very difficult to try to keep Main Street and Wall Street separate, and I'm doing the best I can to do that and hopefully giving you guys some guidance here. But it's getting harder and harder to do that with a lot of the negativity. And I try to kind of sift through the information to see what's relevant, what's not. Your local mall or barbershop closing or restaurant that, has limited seating, believe it or not, doesn't really make a huge effect on the top 10 stocks in the NASDAQ, or the top 10 stocks in the S&P 500 by weighting. Do they affect Microsoft? Do they affect Amazon? Do they affect Intel and if you go to the Qs, companies like Netflix, are those really being affected in Facebook by what we're seeing? Obviously, on some level, it affects the market psychology. Lately, it seems it's had a reverse effect on the psychology, and I'm sure the Fed basically supporting the market's been a big part of that. But I want to talk about gold too, and that's more important right now. We're going to focus on gold and what I saw that was really interesting on Friday, and how I had two gold shorts that worked, but then I almost wanted to flip long because of what I'm starting to see in gold here. It's starting to reverse this short-term bearish trend consolidation that we saw. And we'll talk about the S&P 500 lately. But if you look at the longer-term chart on GLD here, I kind of drew a median energy line here, where once we get too far away from this line, we want to pull back to it. And we're hoping that doesn't happen in this particular consolidation. And so far, it doesn't look like it will, but you can see as we start to stretch away, we want to pull back towards the median line. Here, it got really stretched and snapped back. But the interesting thing is, if we zoom in here, you have this consolidation, sort of a bear pennant forming, and then right here it starts to turn into a bull flag, and you retest this what we call descending top line channel, and then you break through there and you go on a massive run. And then you kind of get overbought and you fall back down, and you actually back test this reversal channel line on the bottom, and then fire back up. And then what do? We hit that little median energy line and stop. And then we pull back to this trend line, and I'll remove this one for clarity, because this is going to be interesting on next week, if JNUG is going to be a monster trade for us or not, and which it possibly could be. So, like I said, we back up, we hit the prior channel line, we back test it. We hit it as resistance, we pull up, and then we back test it, and then we pull up. So let's zoom in a little bit further, and I'm using bar charts just for clarity purposes. So the thing about the market is, when things should fail and they don't, and they do the opposite, it's actually super bullish. And this has been a long-term consolidation period for GLD, which gave it the power to break into the next consolidation period, which is what we're kind of in now, right? We broke out of this long, wide range after it refused to give up the trend line here, and you can see how nicely that line works. We back test it, and then we fire back up. So this line is super important for us to adhere to and recognize and respect. The thing is, we had the opportunity to go back and back test that line again, but we didn't. And instead, we stay within this consolidation frame, right? And now we're kind of breaking to the top end of it. And if I remove this drawing, you're going to see what I'm looking at. Once again, flag patterns within larger flag patterns. So extending this to the right, you can see we broke out of this
bull pennant, but did we have enough power to push higher? Well, probably not, because we're a little bit extended from this move here, right? Probably needed a little more consolidation. So now it just created that wide-ranging consolidation period that I showed, that I just removed, right? Big move from here. It's a lot of power to get there and not pull back and hit the trend line. But it's also impressive that it hasn't pulled back to hit the trend line. Instead, it broke through here, said, okay, I'm a little bit overdone, false break, I'm not ready to do this yet. And what do? We pull back to support, and we could have broken down and hit the trend line, but we didn't. What do? We go right back up and test resistance. So now you have another little pennant forming in here, right? And it kind of goes from the close of the candle, which we think is more important a lot of times, and kind of looks something like this. Now, granted, it's only 1 day over, right? And we're still within the sideways consolidation period, but it did it on pretty good volume, right? After a descending volume on some consolidation, a little bit of a discrepancy or a little battle between buyers and holders, or buyers and sellers. And now we're getting a little bit of a flattening on the MACD on the positive side with a potential curl up. And I like to see that power right there, that long kind of winding, and then whoop, could rip up, right? As long as you stay on the positive side. So interesting moves in GLD here. Even though like I said, we're still on the sideways consolidation period and we'll need to break above there, it kind of looks like we're gonna probably get to, and if we did a channel break in here like this, right, where we should have pulled back and then failed in here and then gone down and tested this one, instead we reversed. So 2 days under doesn't make a trend change. And if we redraw that as a channel and go up top, I think we're looking at 167 and change on GLD. 167 and change. And we know where our support is, right? Along this trend line. So on a risk reward, it's not a bad play. In fact, you could even use this back test for even more, which would probably give you Friday's low. So your stop is basically a close under 162.60 or whatever the low was. I believe the low was 162.78. So let's call it 162.70. So you basically have a point and change to the downside, but you have 3+ minimum to the upside, right? So I like that 2-to-1 ratio odds. But if we want to go and dig into the miners, which kind of travel along with gold, but not so much, they're a little bit weaker, but another interesting move here. And we'll zoom in on this channel and I'll show you what I'm looking at. So remember in a prior video we said, I think it was probably a week and a half ago maybe, we said GDXJ and the miners look a little weak here. They're not ready to move up. And I think we were up in this area somewhere, and I said they're probably going to pull back down to this sideways consolidation and get you around 42, excuse me. And we did get to 41.93. So I love this layer of horizontal consolidation. It gives us a nice support base. And then we have the false break and then the doji. We pull back down, and then now we're back in the normal channel, right? Usually when we get extended outside of channels, we tend to pull back inside of them, unless it's a long-term sideways consolidation breakout, and then an extension of that breakout could continue. But these are moves that have taken a long time, right? We have this move up here, and then we have kind of a sideways leg, and then we have another leg up here, but it wasn't ready because this move was too much, was overextended. On the intermediate term. So we started to do this consolidation, but now this triangle is starting to tighten in here, right? It's tightening up pretty good. And when you look intraday on JNUG and some of the stuff I was following where JNUG broke down, it had the opportunity to break below this trend line and didn't. Instead it reversed and is now retouching this channel. So as these numbers get lower, it becomes easier to break this wedge to the upside rather than the downside. Usually if it's going to make that move to the downside, it probably would have done it already. And if we kind of look at JNUG, what I was trading intraday and GDXJ on Friday, what I was looking at in JNUG was when we gapped open, I wanted to look at the GDXJ, and we just showed it, right? The GDXJ chart, which is what we need to reference when we look for trades in JNUG. So when we look at this one here, right, when we opened up and we zoom in, you can see that this is where we hit the top end on Friday, and that's where I went short because I didn't think it was going to be able to break through there. So that's when we buy our JDST. But here's the problem, and here's where I got caught. And I did make 2 positive trades. So got in the JD, once we kind of shot up there, it's not like I just do it right away. I kind of want to see, how things are happening. So I did get in some JDST, which is short. It's the leverage short inverse of JNUG. And I made some money, and we pulled back down, and I sold it. Then I was thinking about buying JNUG long, and I hesitated. But once we fired back up again and hit the trend line, I bought JDST again, shorting JNUG. And then when we pulled back down, I thought we had the chance to break this line here in JNUG. And then I wasn't really sure because it had tested it and then came back up. And then right in here, I covered and I sold. And I did a video live on it intraday. And I said, wow, I gave up some profit. Well, here's where things get tricky here. And let me see if I can extend that line and this line. This is where things get tricky. And now this needs to be focused on Friday. So what happened again? I mean, there could have been multiple trades in this. And then you can kind of see this little bull pivot right here, this little bull pennant, this smaller consolidation. If you kind of run a trend line there, you can kind of see how all these lines attached. And this is probably how computers are trading today. Now, normally, if this was going to be a continuation move, we would have failed here. And I just stopped trading. I probably could have traded JNUG long here, and then shorted it in here and would have got stopped out. The problem is, actually, I might have done that there, and that's when I took a loss. I did take a loss on one JDST trade. I can't remember whether it was, I forget where it was. That probably makes sense that it was here. In any case, this should have continued lower, right? But instead, we went right back up and retested the horizontal pivot break right in here, straight across. And then it backed off a little bit into the close. So when we kind of pull this back out and look at it, and we don't like to look at leveraged ETFs or ETPs on a longer term basis. Obviously, you can see why, because of the erosion in price. Let's look back at GDXJ. Now we're, like I said, in that wedge, but we're closer to the top end of the wedge. So this is going to break one way or another, right? This is going to break one way or another. And when we look at gold itself being bullish, we would have to think, given the information on gold, and even though this is a little bit weaker than gold, that this is probably going to break to the upside, if anything. And we'll need confirmation by watching this wedge play out on Monday. And it could be a little bit of a hedge in terms of the market psychology as well, with the dollar and all the things going on with the Fed. Gold has probably been wanting to move higher, but it does get redemptions when the market's trading off to the downside. In most cases, it also does too. It gets liquidated until it finds some area of stability where the market just kind of settles in a little bit and the selling softens up, and then your longer term gold traders feel more apt to purchase these ETFs that track the underlying asset to go long. So JNUG could be a real interesting play next week for sure. And if we look at it, let's look at JNUG on like a 10-day chart, and then we'll follow up later this weekend on some stuff. And I said below too, not below, but I said that I'd also like to possibly do, it's hard for me to do the email, and I do the morning emails infrequently recently because I'm so involved in my trading and my business. It's easier maybe to send out a text, so I might start doing text alerts instead. But so you can see the trading pattern that we've kind of formed here, where we've had the ability, if you're looking at the context of this is still a little bit of an uptrend, and it probably breaks somewhere in here, right? In other words, if you're in this little move here, you don't want to see it go much further. You want a continuation move, but it doesn't. It fails, and then it bounces lower. And then the context of this channel from the very top, which we usually don't like to draw our channels like that, we should never really gotten above this, right? If we were going to have a continuation move down, we should have just continued to do the bouncing ball into descending resistance and then failed. But instead, it fired back up. So is it short covering? Is it just because of Friday's selling. They were looking into something that's to hedge themselves. It could be, but it could be something more than that too. So we had a decent reversal on pretty good volume here and breaking above this trend line. And now we're back above this one. So if I remove this one as well, and we'll finish up with this, you'll see that the little pivot break here, and it's kind of back tested in this area here, and then fired back up again through this area as well. So now what's going on? I mean, are we going to get ready for another move higher here? We've shaken out all the weekends in gold and some of the leverage ETFs. It's possible. So definitely going to be watching GDXJ and JNUG on Monday. In fact, if it's a little bit weak, I might just start accumulating position with a stop where we talked about on GDXJ, looking for a bigger move on JNUG. Interesting action though there in gold. And I'll talk about S&P and why I think we could have a gap down on Monday. The only reason I'm thinking that the market is still not ready for a big sell-off here is just the action in the Qs. They just still look so strong, and obviously the weakness in the diamonds and SPY were relevant, but it seems less relevant if the Qs aren't going to join the party to the downside. So it gives me a little bit of trepidation, a little bit of I don't know. I don't want to be buying like TVIX and holding it, although I do trade it intraday off SPY channels. I just don't like the strategy of buying and hoping. Obviously, we know it's been holding up pretty well with some of the concerns here that the market's topped out. But my target price was 135 when it was at 190 on TVIX. I know I'm going off the subject here again. Sorry about that. And it probably should have happened. I thought it would happen by Monday, but given the move that we saw Friday, the reversal, I have to admit when I'm wrong, and I came within 10 points of it. Maybe closer. I forget how low we got on TVIX, expecting us to grind into the gap on SPY, and we started off Friday looking like that, but obviously the sellers took over because they were stranded from prior days there in pullbacks and just wanted to get out and liquidate their positions going into a weekend. That might be a little bit of a concern. So that's my take on the market here. Nothing is horrible just yet. I mean, the backdrop of the economy is definitely not conducive to higher prices in the market, but we could have said that from the bottom. I just do think that island top reversal on SPY is significant, and that you're getting rotation into the Qs as they continue. And the Qs look super strong. And we'll talk about a couple stocks in there that I think are going to go higher regardless of the market.